Today we're talking about the Very Good Food Company, ticker symbol VERY or VERY on the Canadian exchange and VRYYF on the US exchange, because this has been an extremely hot stock recently. From going public about 5 months ago, their stock is up over 500%, which is some astronomical returns for early investors who made a big bet on this stock. So it's clear, Very Good Food here is on fire. So what's next for investors? In this video, I want to discuss the following. First off, what is this company? What do they do? Secondly, why are they so popular right now? There's a couple things in there I want to talk about. Then let's take a deep look at their fundamentals. And then finally, I'll share with you if I plan to buy this stock or if it's just too late to get into the stock now. Guys, this is a brand new channel, so please drop a like down below. Literally every single like helps us grow, so I truly appreciate that. And also make sure you watch the entire video through because there's a lot of insight to share and you may be surprised with some of the stuff I cover here today. Getting right into it, let's talk business, specifically the Very Good Food Company and what exactly they do. So Very Good Food is a plant-based company. Yep, it's on that trend. And they state their mission is to employ plant-based food technology to create low-processed products that taste good and is healthy for you. Now, I know what you're thinking because I thought the same thing. Here we go again, another Beyond Meat knockoff. And yeah, it kind of is, but they have a few unique things about them, a few unique products as well, which they could grow with over time. The burgers, of course, are most common, but what's very unique is their steak and ribs. Not sure how they managed to figure this recipe out, but I'd be down to give it a try. Hey, Very Good Food, if you guys are watching, send me over a sample. I'd love to give it a shot. And really, their goal, guys, is to just fill the gap, it seems, where other giants like Beyond Meat and Impossible Foods are not 100% focused on. Things like pepperoni, cauliflower wings, and a couple of other interesting products. They also offer some bulk box items where you can buy a bunch of stuff for a lower cost directly from their website. So direct to consumer model here. And if you check out their website, they have something like a holiday box meat to take advantage of now. And I'm sure they offer this for different seasons as well to get their customers to buy more and get in the holiday spirit. And here's my perspective on all of this. I think that they've built a good brand, they're building a very good brand, and they have a good future ahead from the brand perspective. They have good products as well, and I don't know if they're going to win in like the burger segment and the hot dog segment, because that's a very competitive space for plant-based foods. However, they can go very niche. They can go with pepperonis, cauliflower wings, all that kind of stuff, and kind of grow from that segment outwards. Okay, now let's discuss why this company is so popular. Okay, I'm going to be honest, and I think everyone here knows it. The stock has seen a massive run in the last couple of weeks because a massive, in fact, the biggest stock market channel on YouTube covered the stock and he said that he was buying this stock. So it's clear that exposure gave this company a ton of press and a lot of investors followed suit and bought in as well. But that aside, here's some very, see what I did there, interesting things about this company. The estimated market cap for plant-based meat in 2018 was $10 billion, and by 2026, this is expected to be over $30 billion. That averages to an expected 15% annual growth rate, which is very impressive. And while that is exciting, you have to understand that this is a very, did it again, competitive space. Plant-based foods, that sector is exploding, but because of that, a lot of companies are trying to get in here. Beyond Meat, of course, is the leader, but then you have big brands like Impossible Foods, you have Tattooed Chef, and then you also have traditional companies like Kellogg's, for example, offering these plant-based products. So yeah, it's getting heated up in here. But here's the thing, because Very Good Food is so small still, they have the potential to grow rapidly by just targeting, little niches like I keep mentioning and just growing that way. They just have to look and say, hey, so, okay, these products are offered by all our competitors that are much bigger than us, have bigger brands than us. So let's take a different approach. Let's offer those products, but let's also offer a couple other unique things that'll get people interested. Maybe they'll try it out and then they'll fall in love with the brand and try other products out as well. If you look at this chart that the company shared with us, you can see that since the global issue has hit, back in March, their sales have absolutely exploded. Particularly, guys, online sales has seen massive growth, but it is slowing down now. But their wholesale sales have been growing simultaneously to try to make up some of that difference. Regardless, I'm not going to put this company down. They have been doing an incredible job executing. They have been growing incredibly well, and for a company that's so small to see such a massive growth in such a short period of time, it's impressive, and I will give my hat off to them. Now, while we see the graphs kind of trending lower and we see their online sales shrinking, I think that it'll still remain elevated from pre-March levels, and I think this will be kind of the new norm for the company, with online sales being a big chunk of their business. And over time, I think that trend of going down will reverse and it'll start going back up again as the company keeps growing. A big reason for me thinking that is because of this announcement here, which is an upcoming California factory that they're building to help service the US market better and expand their reach there. The facility is around 25,000 square feet and would increase their production volumes by 68 times. So that's expected to be a game changer for this company. This, I think, is going to be a huge catalyst for the business, because once this factory is ready, it'll be a huge asset for them to really go head to head with much larger companies, which are their competition. Now, speaking of assets, let's take a deeper look at their fundamentals to see how the company's health looks. This is a slide they shared. Q2 revenues were around $1.1 million, which was a 400% growth year over year. Absolutely amazing. This also resulted in gross margins increasing to 42%. Again, amazing. And guys, this is extremely high margins for this business and industry. And if they can sustain it, great profits are going to be in this company's future. The last thing to note here is their total assets. This is a small company, and their assets sit at under $7 million, of which $3.5 million is cash, so they seem to be in a comfortable position. So great, they have around $3.5 million in cash, that's Canadian dollars, but what did their liabilities look like? According to the latest release, the company had a net loss of $1.65 million in the quarter, and they reduced their outstanding debt by $1.1 million. Again, this is in Canadian dollars. So naturally, after reading this, I was a little bit concerned. I mean, they reduced their debt by over $1 million, they had net losses of $1.6 million. That's a lot of money to lose. Now, I'm assuming that a lot of these expenses were kind of one time because of everything going on with the business, them having to shift and kind of focus primarily on online. And like, because of the global issue, it was just kind of like a diversion. That's kind of what Beyond Meat had to do as well. So, you know what? Maybe it's a short-term issue. I'm not really going to focus too much on it, but those big losses do have to remain in the back of my mind. Clearly, we can see here that they still have more long-term liabilities outstanding. The latest report I can find says $2.8 million US dollars, but they may have reduced that in this recent quarter. And here's another thing, guys. When I look at their income statement, yeah, they pull in good revenues, but they spend just as much as they pulled in, which is why you're not seeing any real profitability here. And yeah, I get it. They're a small company. They're trying to grow their brand and trying to grow their exposure. But guys, how long can you really go by spending $1 million per quarter and you have only $3.5 million on the balance sheet? A simple math tells us that won't even last a year. So because of this, I think that's a very real risk that you have to understand with this company. I don't think that bankruptcy is going to happen anytime soon if it does happen. But to burn that much cash and to have only around $3.5 million on the balance sheet, you have to definitely keep your eyes peeled on this one. But I'll say this, yes, the growth is there. The growth is monstrous. So it does kind of appeal to some investors to take on that risk, even though the business financially may not be in the strongest position. I think that having a small position in the stock could make sense because it is a risky play and maybe you want some exposure for those massive potential 10x gains. But where the problem starts to occur is when people have this as their largest position in their portfolio, making up a significant portion of their wealth. And that kind of brings me into my fourth point here. Am I buying into this stock, and is it too late to buy into this stock? So here's what the charts actually look like for Very Good Food, and you can see the exponential rise in recent weeks, and there's huge amounts of volume coming into this stock. A lot of this is due to YouTube, which usually is regarded as dumb money, so the big institutional investors are still generally staying away. And today, when you look at this company, it's sitting at like a $300 million market cap. That's like infancy, that's like baby money when you look at the grand scheme of things in the market. And when you look at their biggest competitor, Beyond Meat, it's sitting at around a $10 billion market cap. So yeah, there's huge potential if they can execute and kind of follow in BYND's footsteps. But that's kind of the problem I see here. Investors are trading heavily on hope for this company. They're still a young company, so they don't have a huge track record of proving things out. So the only thing you can really do is hope that they continue executing and execute even better in the future. But again, I want to reiterate this point. I do believe that this company has phenomenal growth, and you're not going to find that sort of growth in the market that often, so it definitely has a good story to it. However, I'm a numbers guy. I always look at the financials, and the financials here don't give me a whole bunch of confidence. So because of that, I can't really say that this is a stock for me. Also, if you're investing in this company, you have to realize how speculative this business is. Yeah, they're doing great right now, but does that mean that they're going to do great in the next year, in the next 2 years, 3 years, whatever it is, a long-term period really that you want to hold this for? I don't know. There's definitely risk involved, and I think everyone investing in the stock should realize that and should say, hey, if this goes south and I lose, say, 50-60% of my capital, I should be okay with that. But this mindset that I have isn't just for very good food. It's pretty much for any company that's, a couple $100 million market cap, under $1 billion typically. They're very volatile. There's a lot of risk involved, and that's just how the game goes. Yeah, exposure to these companies is fun because you can double, triple your money in no time at all, like many of you have. But just remember, as quickly as those gains come, those gains can be taken away as well, so just be ready for that. Now, is it too late to buy into the stock? Honestly, guys, it depends on what you think this company is going to be doing in the future. If you really do strongly believe and have conviction and, done your research to understand that this company could be like a Beyond Meat in the future with a $10 billion market cap, then no, this is definitely not too late to buy in. It's at like 300 million right now. You can get some impressive gains on your capital if that does play out. However, on the flip side, if you're looking at the actual fundamentals and what the valuation is today, yeah, this company is expensive on those traditional metrics, but like I've said time and time again, you can't really use those metrics for high growth businesses like this, and there's definitely money to be made in the stock, especially over the short term here. But regardless, whatever you plan to do, guys, let me know in the comment section down below. Again, brand new channel, so subscribe, make sure you turn the bell notification on. This channel is going to be dedicated to Canadian content, so if you like Canadian stocks, make sure to stay subscribed because there will be new videos at least on a weekly basis on this channel. Anyways, guys, thank you so much for your support. Don't forget to invest positively, and I'll see you in the next one. Peace. Hey?